Hi, everyone. John Money McKinley here. Coming here today, I've got some good information, some interesting information, and some maybe not so good information I want to share with you. I've been getting a lot of requests lately from past clients as well as current clients wanting to have a better idea and better understanding of what's happening in the world of interest rates. And I'm going to touch here briefly on what has been affecting our interest rates recently, as well as where you can look to get a better idea of where things may be moving in the world of long term interest rates. I would like to ask you all a favor, though. Really appreciate it if you all would like and subscribe and share. I put together Real Talk with Real Estate Pros as a way to be able to bring you all some great information from professional experts, such as myself in the mortgage industry, real estate experts, credit experts, insurance experts, experts that are involved in every part of your home buying and home owning process. So that way you have a place to come to get a better idea and understanding and make an informed decision whenever you're looking at doing something with real estate. Well, let's dive into this a little bit. We've had a lot of interesting things happen since January 20th when the new administration took over. And a lot of what's going on could have a benefit in the long run if you're wanting to look at getting lower interest rates. And I'm going to touch here briefly on what causes and how the interest rates work to give you a better idea and understanding. When the economy and businesses and the stock market are rocking and rolling and doing great, that's typically not good for our long-term interest rates. Typically, we'll see higher interest rates when things are doing great. And the reason is the money, when things are doing great in businesses and the economy, money's moved out of the 10-year treasuries in the bond market and moved into the stock market and other investment markets, typically out of the bond markets, which causes the long-term interest rates to raise. When we start seeing some turmoil and some trauma in the employment numbers, in the business reporting earnings, that tends to lead investors to move out of those investments and move into the more secure, safe investments, such as the bond market, which we've seen a little bit of that happening recently with what's been going on. Now, last Friday, we had the jobs report come out. A lot of us were thinking when that happened that the jobs numbers weren't going to come in as good as we were hoping them to be. Well, it looks like the employment numbers rose a little bit from February. So that's a good thing for people that are needing jobs. Unemployment rate changed a little at 4.1%. Employment trended up in healthcare, financial activities, transportation and warehousing, and social assistance. Federal government employment declined, which I think we all know why that is. Unless you've been underneath a rock or haven't turned on the news lately, the current administration is really going through and eliminating a lot of the federal jobs. I'm going to touch on that in future upcoming episodes here, talking about how that's going to affect the real estate market and the mortgage market. One of the main things we've been seeing happening is with the CFPB. I'll get into that in a recent show, in a show coming up here in the next week. But that is not going to wage as well for long-term interest rates. There is something I would like to share with you here, and this is as of today, March 10th, 2025 at 9:50 a.m. Central Time. That is, we're looking at the 10-year Treasury note is actually trending down. That puts us in a better position for a possible repricing if we keep trending down. Now, With all of this happening and all of this going on, does that mean when the 10-year treasury starts dropping down, ooh, let me call up John right now because I'm going to get a lower interest rate? Not necessarily. It takes time for the markets to react. It takes time for repricing to happen. Have we seen a little bit better pricing over the past week? A little bit, but not enough where it's made me want to call out to any of my clients who are waiting to make a decision on refinancing and telling them it's time to pull the trigger. With all of this said, I'm going to be keeping you all up to date much more through my channel here to be able to get that message out, because there is a lot of turmoil happening right now. I shouldn't say turmoil. There's a lot of changes happening, which could be very good for us and lower interest rates. Even the president has said there's going to be some pain with all of this stuff that's happening as we dig through this and come out of what we've gone through with the economy to get things moving in the correct direction. And what I'm trying to help my clients do is be able to put yourself in a position to where we can time it so you can grab the lowest interest rates possible before everything starts moving in the correct direction again with the employment and with the job markets and with the companies doing well. So these are some things to keep an eye on. And I'm going to recommend that you like, subscribe, check back here often, as I'm going to be bringing more updates. Also, too, I'm going to leave in the comment sections below to where you can go ahead and subscribe to my newsletter that'll keep you up to date on things that are happening, as well as, if you'd like, you can also subscribe and have my videos emailed and texted to you as well. I appreciate you all tuning in. Look forward to seeing you all very soon, and keep an eye out. We are going to be having more of these short videos. We're still going to keep doing our live weekly shows, having our experts on, but doing a lot more of these short videos so I can really get some good information out and share with you all as we go through these changes and work to put ourselves in the position to take the best advantage possible. And as always, you guys have a great day.